Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to another edition of Monday Investing Experiment on Wealth Matters podcast. Hope everyone is doing great. If you don't know me, I'm an immigrant. Of course, you can tell from my accent. And I moved here about over 20 years ago. Um, of course, I come from IT world, have invested a lot, not a lot, but started investing a lot in real estate in the last 5 years. But if you have not heard first episode or episode number 100, do listen to those episodes. They will give you an idea about who I am, what I do. But I know there are a lot of new listeners, and if you have not heard me before, I will go through my real estate investment experiment starting in 2011. I bought my single family house, or not single family, sorry, townhouse in 2007. The market went down close to 40-50% here in California, and even I would say 30 to 40% of US of A. I decided to move into a single family house in 2011, and that's where I learned about real estate because I had to rent out my townhouse. So that experiment, I would say accidental landlording somehow worked out, even though I was still cash flowing, but not as much as I want to. But that taught me the power of real estate. At the same time, in 2015, I owned this property or I was renting the property for 4 years. I listened to Rich Dad Poor Dad in 2014. I kept thinking that, I could see the depreciation loss on my tax return. And I want to remind everyone some of the benefits of real estate when you are comparing stock market against stock market or crypto. And I recommend everyone to diversify. I personally don't invest a lot in stock market, but my 401k which is being managed by a professional fund manager. So, and that's why I don't want to put my entire portfolio in stock market either. But my majority of my portfolio, 50% or so, is in real estate. That is 10 to, I would say 20% is in stocks because of 401k. And then the rest, the 20% or so, I keep cash as liquid. I know that's not a good thing to do, but I prefer to be conservative on that side. And then 10% is in a lot of speculative investments, high risk, high reward. This is the money I can afford to lose. And those money, that part of the portfolio is mainly invested in startups and cryptocurrencies. I think cryptos have a long way to go. We are just getting started. I was reading about it, and about only 100 million people in the world own cryptos right now. And you know how many people are in the world? 7 billion. I'm just looking at what would happen when about a billion people own some kind of cryptocurrencies. What will happen to Bitcoin, Ethereum? I'm not an investment advisor. I'm not trying to give an advice on what and how to invest in cryptos and real estate, but I'm just trying to share my experiences. So real estate, let's go back to the real estate world. In 2015, I decided to sell that townhouse. In hindsight, it would be a wrong decision because I missed out on all the appreciation California and even other parts of the country has seen. Because 2015, I barely broke even. I wanted to get out and start investing out of state. I took the money I earned and I invested in my very first disaster, the property in Cleveland, Ohio, single family house. I put 35,000. I thought 700 rent per month. You can't go wrong. And I'm telling you, you can go wrong in every way possible. And that's what happened. I lost every penny in that investment. The tenant stopped paying after 6 months. It was in a war zone. I had to switch my property manager, and the new property manager told me that you can't even walk there without a gun. So that's how bad it was. There were a lot of mistakes I made. There was a tenant stopped paying. We couldn't even get in the building, in the house. And then there was a big leak, water leak in the property. So the water bill came to, at some point, I had water and sewer bill of about 4,000 a month for 3 months. So all the money I had made was gone. And then I had to sell the property for, I remember, 3,000 bucks. Because by the time the tenant left, it was just trashed. And icing on the cake is the next door house got some kind of fire that damaged my property even more. And the insurance company said that I got to I reached out to their insurance company. They said your insurance company needs to cover. My insurance company said that they have to cover. I just gave up and I decided to just sell the property. So big lesson learned: don't buy in the war zone. Research the markets, neighborhood. Uh, don't look at high cash flowing deals, because there is always a catch. I would not recommend anyone buy less than $100,000 worth of property in anywhere in the U.S., because that has to be in a bad neighborhood. And also, if you buy around $100,000 worth of property, you can get financing. Anything less than 70 grand, you can't get financing, because the banks don't want to lend less than 50,000. They still got to go through the same amount of paperwork when they are lending 50,000, 100,000, or a million, right? So why would they waste time on lending less than 50,000? So, and the beauty of real estate is the power of leverage, right? Because you are able to acquire $100,000 property by just putting 25,000 or 30,000 of your own money, even though you can write off or depreciate the entire property. So that's the power of real estate. But talking about my investment experiment, that first one failed really bad. And that's why I want to share with everyone. As I have mentioned before, that I just don't want to talk about my great investments, my profitable investments. I want to talk about the mistakes I made. I want to talk about my bad investments, and this was one of those. The next one was little better. Again, I still was working with different. Now I started working with a different turnkey provider. A turnkey provider is someone who buys the property for you, rehabs it, and usually rents out the property for you. He or she may not be the property manager. Sometimes they are full service turnkey provider. Then they are sometimes. You will have to hire a property manager. I prefer a third party property manager, so that I have a second set of eyes. I have someone who is independent of the turnkey provider. So that's my take on it. My real estate journey started like that in 2015, 2016. It ended, but I still continued to buy real estate by that time. So in 2016, I already had owned another single family. Then I bought next single family as well in the same market, Milwaukee, Wisconsin. And 2017 is when I just started scaling up. In March of 2017, I acquired the 9-unit property in Bakersfield, close to Bakersfield, in Ridgecrest, which we sold last year. And pretty much I doubled the investment I had made in that property as well. And then in 2017 itself, I bought another a duplex, another 9-unit property. So 2017 was the year I just jump started. I was like, this is what I want to do. This is what now I understand. And I think part of the reason, maybe I also read Cash Flow Quadrant in 2016. And then 2017, I read Tax-Free Wealth by Tom Wheelwright, took his course, Tax-Free Formula. If anyone wants to know more about the course, do ping me via email, Facebook, LinkedIn. All the links are below in YouTube. And if you are listening to this on podcast, the link should be there as well. So that's about my investment experiment in real estate. Do let me know what you guys think of this particular segment on Mondays. And if you want to hear me talk about something as well, please let me know, because I'm always open to ideas. And I will be grateful if you can subscribe to my YouTube channel and hit on that bell icon. If you are listening to this on Apple Podcasts or any other podcast platform, please subscribe. Please leave a review, and share with your friends and family members. So this is it about real estate. I do want to share a couple of jokes about investment. One of the joke I someone told me that two friends were talking, and the one friend says, "I was on the edge when the market went on a roller coaster last week. How did you deal with it?" The other friend says, "I slept like a baby." Wow, how? Aren't you 100% invested? Yes, I woke up and cried every hour. So there was another joke I have, is about investment. After 10 years, my portfolio finally hit the $1 million mark. So this is what one of my friends said. I said, wow, I bet the past 10 years were tough on you. Yes, man, all the blood, sweat, and tears. It took hard work, discipline, and the $1 million my aunt left for me in her will. Happy investing. Let's grow and invest together.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!